Most people think you need a lot of money to get into Bitcoin. They assume if they don't have thousands of dollars, it's not even worth starting. But that mindset is exactly what keeps people on the outside. The truth is, Bitcoin was built to be divisible. You don't need to buy a full coin. You could start with $10, $20, or even less, and still participate in the same system as someone holding millions. So the real question isn't, is $10 enough? The real question is, what strategy turns small amounts into something meaningful over time? Because that's where most people get it wrong. They treat small money casually. They take risks they wouldn't take with larger amounts. They chase hype, they jump in and out. And because of that, the $10 never grows. It just cycles in and out of the market. If you want to turn $10 into something real, you have to treat it like it already matters. That means structure, consistency, and patience. Let's start with the first principle, accumulation. Bitcoin isn't a get rich quick move, it's a long term accumulation game. The people who've benefited the most didn't time the market perfectly, they stayed consistent over time. So instead of trying to flip $10 into $100 overnight, the smarter move is to build a habit around it. For example, instead of putting in $10 once and hoping for a big return, you commit to putting in $10 consistently, weekly, bi weekly, or whenever you have the opportunity. This is what's known as dollar cost averaging. It removes emotions from the process. You're not trying to guess the perfect entry point. You're building a position over time. And this matters because Bitcoin is volatile. Prices go up fast, but they also pull back. If you only invest once, you're exposed to whatever price you entered at. But if you invest consistently, you smooth out that volatility. And over time, your average cost becomes more stable. Now, here's where this starts to compound. Let's say you invest $10 a week. That's $40 a month. Over a year, that's $480. And on its own, that might not sound like a fortune, but Bitcoin isn't static. If Bitcoin grows over time, and historically it has, that accumulated position increases in value. And more importantly, your habit strengthens. Because the real power here isn't the initial $10. It's the system you build around it. Now let's talk about the second principle, holding. This is where most people break their own strategy. They buy Bitcoin, it goes up a little, they sell. It drops, they panic, they buy back higher, and over time, they lose position. Now, what they don't realize is that the biggest gains in Bitcoin have historically come from holding through volatility. Short-term moves don't matter as much as long-term positioning. If you're constantly in and out, you're not giving your investment time to grow. So, if your goal is to turn small amounts into something meaningful, you need to give it time. That means setting a clear intention. You're not touching this for this amount of months. or even years. Now, here's the third principle, and this is where it starts to separate you from most people: increasing your input over time. You might start with $10, but as your situation improves, you scale up. Maybe that $10 becomes $20 a week, then $50, then $100. The key here is progression, because if you stay at it $10 forever, growth will be slow. But if $10 is your entry point and you build upward from there, now you're creating momentum. And this is how small beginnings turn into large outcomes. Now, let's talk about something most people overlook seriously, and this is custody. When you buy Bitcoin, where you store it matters, all right? And if you leave everything on an exchange, you don't fully control your assets. Exchanges are convenient, but they're also centralized platforms. At a certain point, as your holdings grow, it becomes smarter to move your Bitcoin into a private wallet where you can control the keys. This isn't something you need to rush in one day with $10, but it's something you need to understand early on, because the goal isn't just to accumulate, it's to secure what you accumulate. Now let's go even deeper into the mindset shift of turning that $10 into something significant requires thinking differently about money. Most people see $10 as disposable. They'll spend it without thinking, right? But if you redirect that same $10 into an asset consistently, you're changing your financial trajectory. You're converting consumption into accumulation. And over time, that shift compounds far beyond the initial amount. Now, let's address expectations. Can $10 turn into a fortune overnight? No. But can $10 be the starting point of a system that leads to significant growth over time? Absolutely. And that's the difference between hype and strategy. Hype focuses on fast results. Strategy focuses on repeatable actions. And if you focus on the process, the results will follow. Now let's talk about volatility, because this is where people get tested. Bitcoin doesn't move in a straight line. There will be drops, sometimes sharp ones. And when that happens, most people run in panic. But if you understand the strategy, those drops become opportunities. If you're consistently investing, lower prices mean you're buying more Bitcoin for the same amount of money. That's how accumulation accelerates. Instead of fearing volatility, you use it to your advantage. Now let's tie this into long-term perspective. Bitcoin operates on cycles. There are periods of rapid growth, followed by periods of consolidation or decline, right? And if you only focus on short-term prices, you'll get shaken out during these cycles. But if your focus is long-term accumulation, those cycles become part of the process. You stay consistent regardless of short-term movement. And that consistency is what builds position. Now, here's another layer: discipline. It's easy to start, it's harder to continue. Difference between someone who builds something meaningful and someone who doesn't usually comes down to consistency over time. Not intensity, not timing, consistency. So, If you're serious about turning small amounts into something larger, you need to build a routine around it. Set it, automate it if possible, and remove as much friction as you can. Because the easier it is to stick to, the more likely you are to continue. Now let's address the idea of fortune, right? For some people, that means millions. For others, it means financial flexibility, reduced stress, or long term security. The key is defining what it means for you. Because once you define that, you can align your strategy accordingly. And that's what this really comes down to. Not chasing a number, but building a system, right? Starting with $10 isn't about the amount, it's about the discipline, the structure, and the mindset you apply to it. Because those are the same traits required whether you're investing $10 or $10,000. So if you're waiting for the perfect time or the perfect amount, understand this: there is no perfect time. There is only starting and staying consistent. And once you do that, the path becomes clearer. Your position grows, your understanding improves, and your confidence increases. That's how small beginnings evolve into something much larger. Not through luck, not through timing, but through consistent, disciplined action over time.